G'day, taxpayers. Look, as the dust is settling from the fabulously low inflation data for December month and December quarter, I'm perplexed that there are still a number of people out there saying that interest rates should not be cut by the Reserve Bank of Australia. And not just that, but the reasons for it. They're saying that the labour market is too tight, that unemployment is too low, wages growth is too strong. Now, just a few basic facts to put that argument into the garbage bin where it belongs. Wages growth is slowing. It's gone from a peak of 4.3% down to 3.5%, and next month we'll get the next quarter's numbers. It's probably going to be in the low threes. 3.1, 3.2, something like that. So wages growth is entirely consistent with the RBA's inflation target. It's falling, and one of the reasons is the labour market is softening. Yes, 4% unemployment's fantastic. I love it. It's great. But compared with where we were, 12, 18 months ago, it's increased by half a percentage point. The low point was 3.5%. It's now 4%. It's probably going to tick up a little bit in the next couple of months as the economy slows and we've got the job vacancies and job ads sort of suggesting that the economy and the labour market will weaken a little bit. So it gets this question that I've been banging on about for, a decade, that Nauru is well under 4% or less. And the fact that we're at unemployment at 4% and above means that the labour market isn't that tight. You don't have wages growth decelerating if the labour market is at over full capacity. So the arguments for rates on hold have zero credibility. And it's funny that a lot of people make the arguments for rates on hold are the same ones who were saying that the RBA was way behind the curve in terms of rate hiking and that we needed to see, 2 or 3 interest rate hikes last year. And it was the biggest mistake, I think, in RBA history, according to some of the commentators. But anyway, RBA is going to be cutting on the 18th of February. I still think the door slightly ajar for a 50-point move. We don't get a huge amount of local data between now and then. There's retail sales and a few other bits and bobs. But with the Canadians cutting again, Europeans likely to cut tonight, Fed on hold, although they're dealing with the train wreck from Donald Trump. They've got a very different scenario to us. And the Kiwis going to cut again, and every person and their dog just about cutting. We're going to be joining that race, and we need to get rates down if we're to avoid the unemployment rate getting too high and the labour market becoming too soft. Low unemployment is something to celebrate. And we don't want wages to go below 3% either. That would be too low and suggesting that the labour market would be too loose, not tight. Look at the facts. They're enlightening.